What's up, everybody? Welcome into Alpha TA Weekly. If you don't know what TA means, it means technical analysis. Today we're going to look into the charts. We're going to look into stocks like Nvidia, Tesla, Oscar, UNH, and then I'm going to be taking suggestions from you all on what stocks you want to see charted and to see how I go through with my technical analysis, tell whether or not we're bottoming out on a stock, where the stock's going to go over the next week, month, year to the best of our abilities. You cannot predict these things 100% with technical analysis, but what you can do is you can get a high likelihood of something happening with the technicals. And if you have technicals and the fundamentals, then that's a double whammy and it's even better. So, like I said, we're going to get into the charts here. We're going to be talking a lot of charts today. We're going to be talking about a lot of strategies. Like I said, if you want me to chart one of your stocks, if you want to see my thoughts on it, leave a comment now, drop a comment in there, and I'll get to it at the end of the video. So first and foremost, we're going to start off with talking about the overall markets. We're going to talk about the overall markets. One, we're going to talk about the QQQ, the SPY, where I see those going in the coming weeks. Then we're going to look into Nvidia, Tesla, UNH, and Oscar charts. And then finally, like I said, we'll get into some of your charts that you want to see. ASML and Salesforce, Nikki, that is two great stocks. And I would definitely love to look at both of those. So we will write those down. ASML, CRM. We'll write those down and we will get to them at the end of the video. So let's dive into it. So if you didn't know, if you're new here, there's going to be a bi-weekly thing that we go over technical analysis. Last week we did fundamentals. It's going to be rotating between fundamental weekly and technical analysis weekly. And if you're here, drop a like, drop a subscribe, guys. Share this with people that you know that want to see this type of content. I really appreciate it, and it helps get the word out and brings more people to the community, brings more people in here to share the love with and to teach. Right, I love to teach this stuff. So, what's up, Rambler? How's it going? All right, guys. So, the Nasdaq, the QQQ. We had a almost 2% down day on Friday. We got very, very dumpy in the markets, and we were able to predict this in the community and put this out there. Now, I say predict, and I don't mean it as like, oh my gosh, look at me, I was able to make so much money predicting this perfectly. I didn't. I was able to avoid losing a lot of money by being able to predict that this probability was very likely. How did we know that? Well, what you're looking at here, it's not just a bunch of jumbled up squiggly lines. What this is you have 1, 2, 3. We'll label these. Number 1 is your 2-hour Williams percentage range. Number 2 is your daily Williams percentage range. And number 3 is your weekly Williams percentage range. Williams percentage range is a momentum indicator. It can lead you and show you the way forward. That, coupled with my strategy, the Williams consolidation box, is very powerful. Now, just to give you a quick overview, Williams consolidation box is just that. It's the Williams percentage range. You draw a box. As long as you stay within that box, you are going to continue in whatever direction that is. Now, below negative 50 is bearish. Above negative 50 is bullish. Okay. So if we have a box above negative 50 here, that is bullish. If we have a box below negative 50, that is bearish. And as we all mostly know, if you don't, the higher the time frame, the higher the likelihood. So a 2-hour is going to show 2-hour candles. The daily is going to show daily candles. The weekly is going to show weekly candles. And obviously, the more data you have in anything, the easier it is to predict. The stronger your conviction can be in that happening. So, what did we see that we were able to tell, something's not right here? We need to scale back. Because basically it was Tuesday that I went and I trimmed out of, or I completely exited out of all of my trades. All of my trades on Tuesday, I exited them. Why? Because we had this bear flag right here. We broke down, and right here on Tuesday, we broke out of the 2-hour Williams consolidation box. And if you look over here, we were going to break out of the daily Williams consolidation box. And one more quick note, the thing you have to understand about this red line is that the Williams percentage range cannot go higher than the red line. It can not go lower than the green line. If you zoom all the way back, right? Zoom all the way back. And what you need to understand is it's like a pendulum swinging from side to side. But in this case, it's up and down. The pendulum is swinging up and down. So you can clearly see it. We will go from red to green, green to red, red to green, green to red, red to green, so on and so forth. The pendulum is going to swing. It's a momentum indicator. When we get running to the downside, we typically are going to run full cycle down to green. Once we get running to the upside, we're going to run full cycle up to red. Now, with that being said, what is another way we can see this more clearly? Well, the Williams consolidation box. If you're up here just running sideways like this in your Williams consolidation box, you see that you're going higher and higher and higher. It might be a little choppy, but you continue to go higher. The more you run, the longer you run, like on the daily or the weekly here, the more likely that it is that you're coming to an end of that Williams consolidation box or that upward move. It can go forever. It could. But will it? No. Things will always correct, things will always pull back, and things will always go higher eventually. So we had a long Williams consolidation box period on the 2-hour and the daily. We broke out of that on Tuesday, and I sat there and I said, okay, the pendulum is going to swing from red to green now. That is going to take us out of the daily Williams consolidation box. And the daily Williams consolidation box is obviously longer term. And then I sat there and I said, well, that's probably this daily swinging out from red to green is probably going to take us out of the weekly Williams consolidation box. So it's like a domino effect. One domino falls and they all fall, right? And this could lead up to the monthly Williams consolidation box falling out of the Williams consolidation box. Now, what does this all mean? What this means is the 2-hour falling out of the Williams consolidation box, you could see a 1 to 2% pullback if you fall from red to green. Maybe 3, but typically, like you see here, right? It was about, that was a 4%, but that was all the way up here. So we snapped back after we launched in after hours. But typically you see from here, we went 1.2%. So typically, I would say 1 to 3% on the 2-hour if you break a long Williams consolidation box and you go full pendulum swing down to green. Then you can form a Williams consolidation box down there like we have right here, as you can see. And as long as we stay in here, we're going to continue lower. But like I said here, that led us to break the daily Williams consolidation box. If we continue down here and then build a bearish Williams consolidation box, then we could go lower. The daily Williams consolidation box breaking could lead to a 2 to 4% pullback or a 3 to 5% pullback, somewhere in there. Now, the weekly Williams consolidation box breaking, like we see here, that could lead between a 5 and 10% pullback here on the QQQ. So, because it can lead to a 5 to 10% pullback, why I'm so very serious when it comes to the weekly Williams consolidation box breaking out. Because as you can see back here, we had the breakout and we had a big drawdown, right? We had the breakout of this one, big drawdown. We swung all the way down. And if I pop open the actual chart here, you're going to see I pop up in this chart, what are you going to see? You're going to see that when we ran on the weekly, we ran 7.89%. So when we broke down out of that Williams consolidation box, just that breakdown, that quick snap down and snap back, that alone was a 5% candle, a 5% weekly candle to the downside. This Williams consolidation box right here that broke out, as you can see right here, we snap down and then snap right back. That was a 16% pullback. So I said 5 to 10% average, but it can be worse. In April, that was the big one. Obviously, that was 26%, and that was on the monthly was breaking down as well. And we saw something very similar to what we saw on the 2-hour. We broke out of the Williams consolidation box, then we snapped back, and then we plummeted, right? So the Williams percentage range is what I'm getting at here is the Williams percentage range, and what I teach in the high five community. I have courses on this. I have courses on my indicators, not to do a wholesale thing or anything like that, but I have courses on all this. I teach everybody this in my community. This is how I trade. This is how I manage risk in my investments. If we break out of the weekly, I sit there and I look at my portfolios and I say, okay, wait a minute. I don't want to be in a bunch of companies that the fundamentals aren't really there, right? If the fundamentals aren't there and this market goes into a 5-10% correction or into a bear market, I'm telling you, if the fundamentals aren't lining up with that that valuation, those things get hit the most. The biggest momentum names get hit the most. They plummet the most. Okay. So I look at my portfolios and I sit there and say, okay, we're breaking out of the weekly Williams consolidation box. I'm not trying to time the market here, right? But I can clearly see that the probability is on my side that we're going to get a major pullback. So I get out of my trades. I get out of my trades to make sure I don't just get pummeled like in April, and I'll trim out of I'll start raising cash more so, a little quicker. And I made a post about it on X. I said I'm now 55% cash, and I think I posted that on Tuesday or Wednesday, one of the 2 days. I went up to 55% cash, and then boom, we dropped down 2%. Now, again, I'm not sitting here trying to be like, look at me, I predicted it perfectly. Like, that's not the case here. We use the probabilities to be on our side. And a lot of my community members are sitting very happy because they took gains. I didn't tell them to sell out everything. I would never say that. That's dumb. Don't just sell out everything because some squiggly lines say X is going to possibly happen. Taking all the probabilities and you say, okay, we're at all-time highs. Things have been euphoric. We've been seeing a lot of gambling. Okay. We ran like 40% since April lows. Maybe we probably are going to get a pullback. Okay. Oh, wait. And then the Williams percentage range is telling us, hey, we're breaking out of the 2-hour Williams consolidation box. We're breaking out of the daily Williams consolidation box. Oh, now we've ended a week and we broke out of the weekly Williams consolidation box. Could we just snap back and go higher and go back to all-time highs? Of course we could. Of course we could. It's a momentum indicator. It's not like some crystal ball. Of course we could. But what is more likely right now? What is more likely right now based on the indicators and where we've been with all-time highs? A 2% pullback on a Friday typically isn't the end of the pullback. And if we go to a higher time frame here, we can see that we broke out of this resistance. We broke over the 542 resistance. We ran up. And what needs to happen when you break out of resistance? You need to revisit that resistance, punch it in the mouth and say, nope, you're now support. You need to flip that resistance into support. Because in order for this to be validated as not resistance anymore, and for this breakout to be confirmed, You need to come back, bounce here, and then continue your trajectory higher. And I think that's what's going to happen. I'm not sitting here saying we're going to drop 10 or maybe 10, but I'm not sitting here saying we're going to drop, 20%. Like I'm not saying we're going to come back to April lows or anything like that. We could, but I'm saying the probabilities right now are most favoring a 5 to 10% pullback in the QQQ. On the SPY, that would look like, 4 to like 7 or 8, something like that. I don't know. Just like take a couple percentage points off because the QQQ is 100 companies and SPY is 500. So yeah, you have a where's it at? I appreciate that, man. Fairly new to investing. I find technical analysis so confusing. There seem 101 indicators and patterns to learn. Surely it has to be simpler. Yes. So, friend, one, appreciate the tip. I appreciate that. Awesome. I really appreciate that. And you're my first ever person to ever give a tip on YouTube. So thank you. I really appreciate that. That's super awesome. And congratulations on being the first person ever at the RonnieV show. So that's amazing. There are so many indicators. There's so many indicators, and I've been through so many of them. I've back tested so many of them. I looked into so many of them. So on and so forth. Right? There's so many. There is so many. I get it. But what do we know? We need to simplify things. And I'll just be honest. Some people come into my high five community and I teach my way of trading or my way of investing. And that might not be for you. And I've had community members come and I've had community members go. And it's okay. You have to find your community. That might be with the high five community. That might be with me in my strategies. I would love to have you in, right? But it might not be. There are so many strategies, there are so many indicators, there's so much stuff out there, and it can get very overwhelming. You should always start with the basics. I have a trading 101 course that talks about the very, very basics, and then we go into more, um, extremes and getting into all of that. Take it from me. I'm self-taught. I am completely 100% self-taught. Books, YouTube, practice. Books, YouTube, practice. Books, YouTube, practice. For the last 10 plus years. Consistently doing that. Consistently finding new areas to improve on. Consistently, just getting better and better and better and better. And you see me do this, and it shouldn't be, and I might make it look easy and like, oh my goodness, like, dang, he really knows what he's talking about or something. But you need to realize it's behind all of that. At the tip of the iceberg, this is what you're seeing, but below all of that has been the years and countless hours and the late nights and everything of back testing my strategies, looking into all the indicators, figuring out better ways to run my strategies, everything. There's so much work that goes into it. I do think being part of a community makes it a lot easier, and I wish I would have done that sooner, but I'm glad I didn't because I found my own way. And now we're where we are. So, yeah, it is a lot. It is a lot. But what I would say is stick to the very basics. The Williams percentage range, moving averages, anchored volume profile, which a lot of these I have actually for free on YouTube in my Trading 101 playlist. I have a lot of these courses, or not even courses, they're just free, just videos on how to understand these. And then like RSI, maybe MACD, right? Beyond that, you're getting into the nitty gritty. There's a lot of different things. And for me, I personally coded my own. Indicators. I have my high five day trading, swing trading, long-term indicator. I have a high five flow indicator, which basically tells me momentum with volume, and a couple other ones. But those are all part of my community as well. If you want those simplified things, those take a lot of other indicators and smush it into one and give you like a more simplistic, like, okay, green is good, red is bad, like really simplistic stuff like that. So yeah, great, great topic, Amar. And again, I really appreciate the tip there. I appreciate that, or whatever it's called here on YouTube. I don't even know. But yeah, guys, I think 5 to 10% pullback here. We can come right back to this previous high, which was resistance. You see, we couldn't break through that multiple times. 1, 2, 3 times we couldn't break through. We finally broke through, but now we need to come back, retest that area, and then we can continue higher. So that's what I think is going to happen. And if we look down here on a daily chart, it actually is pretty funny because it perfectly lines up with a gap. Now, if you don't know what a gap is, and I'm just sitting here saying a gap, like you're thinking big old gap between someone's teeth or something. I'm not. I'm talking about a gap up or gap down. A gap up or gap down is, I would say, around 60% chance of filling. 60 to 70%, I would say, percent chance of filling the gap. What that means is right here on 23 June, Monday, the next day we gapped up. So that means before markets even opened, buyers came in, bought up this market, and you had a gap up. With a gap up, it's very bullish. And then you see we gapped up and then we continue to run. But with gaps, you have like zero volume in there. So a gap is like empty space. A gap is empty space and you can fall right through it. There's no support in there. There's no support. It's just an empty space and you fall right through it. So a gap fill typically happens because price moves right through there very quickly, up or down. Okay. So because of that, and again, you typically get 60 to 70% of those gaps to fill based on history and over time. We can see that coming down here to about 532-ish, we can see that we most likely will have this continued pullback. Maybe Monday we have a little bit of a snapback, a higher low, and then continue down, right? But what I do know is I would probably put this gap being filled at in the next couple weeks or in August, September, which are typically seasonally weak months. I'd probably put it at 60 to 70% that it's gonna fill, just because of all my indicators in the wins percentage range and what it's all telling me. And then you have an anchored volume profile gap, which this tells you your volume. So in here you have a ton of volume and a ton of support and resistance and back and forth between buyers and sellers fighting it out. And then in here you have this gap where not a lot of volume in there, and you can again move very quickly and seamlessly through that up or down or up. So yeah, that's what I think is going to happen in the market. I think I spent a lot of time on that. I need to get into some of these stocks. But yeah, I hope that all makes sense. So this is how I view not just the markets, this is how I view where individual stocks are going, right? Like what I want is to find these stocks when, like for an investment purpose or a trading purpose, I want a stock to be on this green barrier across the board. And then I wait. Let me get a stock on the green barrier on the 2-hour, the daily, and the weekly on the Williams percentage range. From there, what do I know? I know that we are very oversold, and eventually the pendulum is going to swing back in the other direction. And you can do this for shorting too, right? If you're up here consistently, right, you know the pendulum is eventually going to swing down. So you could definitely short based off of this. But shorting is harder because over time markets go up way more than they go down. So being a bear shorting is way more difficult. Okay. I played puts and hedges with this whole thing going down. We actually we were day trading the QQQ and went like 100 and 200% and we trimmed out of the QQQ puts that we were in, and they were for a day out. And I sat there and I said, you know what? I'm just going to keep this one QQQ put because I saw my indicators telling me we're going to go down further. That one QQQ put ended up going like another over 300%. So it was like 200 and some bucks at the end of the day for that one put contract, and it went 300 and some percent. So I almost made, I almost quadrupled my money off of it. So just following these strategies. That's what 250 bucks. It's crazy. But what I'm looking for again is to be on that ground level. Green barrier is ground level. And then I want to see the 2-hour tick up, and I could take a trade then or an investment then. And then I want to ride that into the daily and then the weekly and then maybe even the monthly. And you see how that works? You start at the ground level, you're at the base level, and you wait for the lower time frame, the 2-hour, to tick up. Once the 2-hour ticks up and tells you, hey, we got a real shot here at moving this trend and swinging the pendulum, not just on the 2-hour, that's the start of it, but then on the daily, weekly, and monthly. Then you got something really good there. Because if you can get in on the 2-hour time frame on the ground level, and then you can ride into the daily, the weekly, and then the monthly, you understand how high that stock's going to go? It's going to go like 100% plus in gains. I can show you. I'll show you with NVIDIA, which leads us into what we were getting at and some stocks to review. So, and I'll do this all for you real quick so you can just see. So I'm going to scroll back. I'm going to draw my green barriers and red barriers. Your green barrier is, again, it can't go lower than that. So here we are on the weekly. We got our green barrier. You just scroll out. You draw your red barrier here. You just change the color. Super easy. Then we're going to do that with the daily here. We're going to draw a red barrier. And then we're going to draw our green barrier down here. Can't go lower than that. And you see that, right? It doesn't go lower than that. It hits, and then eventually it will go back up to red. You see this, right? It eventually goes back. The pendulum eventually swings. Our goal is to catch that momentum on the downward move or the upward move, right? Like it's phenomenal. It's phenomenal. This the winnings percentage range. Not enough people love it as much as I do. I give it a lot of love. Right. You guys aren't ready for this. You guys aren't ready for. I don't even know how many people are watching this, but if you're watching this, you're not ready for this. You're not ready for this. Okay. So, NVIDIA. Let's line up the charts. So you see my little indicator here on the bottom right. We can see when that was when this area right here, we could see up here when that was for the daily. And then if we go over to the weekly or the 2-hour, we need to zoom out until we see it on the chart. There it is. Okay. So it's back. It's like right in here. Okay. We need to actually lower that. Okay. Stick with me. Stick with me. I'm getting somewhere here. I promise. I know a lot of people have very short attention spans because of the TikToks and stuff, but this is where you get this is where you get that alpha TA. I'm telling you. All right. Let me get rid of all this so you guys aren't confused by any of this. I'm getting there. I promise. I know. I'm not doing it right away. We're getting there. I promise you. You keep showing up to things like this, you're gonna learn so much. There's so much you can learn in these live streams. There's so much you can learn by just applying yourself and taking a little bit of time beyond just scrolling through, seeing some young chiseled jaw kid, saying, "Hey, I just made $1,000 in 1 second." Yeah, sure, he might have or something, but more so like, "Oh, look at my Lamborghini! Like I just made $20,000 in a day or something like that." Like, okay, I've had $10,000 days. I don't have a Lamborghini. I don't have any of that stuff. I don't have chiseled jaw. I don't sit there and make stupid little TikToks that just are all about, look at me, look how wealthy I am, like blah blah blah. Like you can go watch those TikToks, guys, but I'm telling you, you're just gonna end up getting scammed. Anyways, let's get back to this. So very simple here. We first find we work backwards, right? So you don't want to look at the 2 hour first because the 2 hour is much more it's way crazier. It goes up and down all over the place. The daily also goes up and down and kind of all over the place. The weekly a little bit less, right? And that's where you want to start. You see the weekly, if you zoom out, it really is more consistently flowing from top to bottom. Sometimes you get a little, erratic in there, but more likely you are going to flow top to bottom. Now, let me blow your mind. How would we have known to buy NVIDIA at $95 or $86 per share at the absolute bottom? How would we have known to buy this? Right? How would we have known? I don't know. You could have just invested in it and sat there and said, yeah, it's undervalued at 88 or whatever. But how could we have really got the bottom? I'm about to blow your mind. We work backwards. You have right here the Williams consolidation box on the ground level, right? Or so Williams percentage range is on the ground level here on the weekly. I'll do this. On the ground level on the weekly, if we look up here, we are also on the ground level on the daily. And we actually formed a Williams consolidation box. So what do I like to look for first when I'm looking at a possible trade or investment? When I'm thinking about, getting into a company, I'm looking at the weekly to be at the green barrier because I want all of this upside. I want all that upside. Give me the loaves of bread, not the crumbs. I want all that upside. Right? When you're already at the red barrier, you just have to realize like, yeah, there's still upside, but way less than it is down here. One. Two, by grabbing a company that's on the ground level, you are getting what? You are getting less risk. You're getting less risk being down on the green barrier. Because as you can see, if I just scroll back here, look right here. Look at the weekly. Are we more so under -50 or above -50? We are more so above -50. Above, up here. More times than not, we are higher. We are above -50, meaning more times than not, we are bullish. And we already know that more times than not, the market is bullish. Doesn't matter, .com crash, the housing market crash, doesn't matter. Those things happen, but over time, the market goes up and up and up and up and up. It has squiggly lines in between where it goes down a little bit, blah, blah, blah. But over time, it goes up. So obviously, on the Williams percentage range, you get more bullishness than bearishness. So that is why we need to understand that when we are at the ground level, we're not going to stay there for very long because we already know that more times than not, and overall in the markets, we go up. In a great company like NVIDIA, more times than not, we go up. We want to ride up. Trying to time down shorts is very difficult because you're going against the overall trend of the market. It's really obvious and easy. If you're sitting there in your perma bear and you're always trying to short everything, it's way more difficult than being a bull and trying to get have better timing. Have better timing is what we're looking for, guys. So, okay, I'm getting to the point, I promise. It's not like, simple. It's not like super simple. It is, but it isn't. I got to explain some of it. Okay. The weekly is on the ground floor. The daily is on the ground floor. The 2 hour, what do we see? It's coming down. Why is it coming down? It's coming down because you're in the Williams consolidation box. But then what happens? What happens? Oh, you broke out of the 2 hour Williams consolidation box. Now, you ready for this? I'm about to blow your mind. You broke out right here. You broke out right there. So your drawdown would have been almost 7%. if you stayed in this thing, I'm going to show you. We broke out of the Williams consolidation box on the 2-hour. We know that on the daily and the weekly, we are at the ground level. So my risk is very minimal. My upside is massive. We're in April. This is April 7th. We just had a waterfall in the markets. VIX is at like 60 or something. This timed NVIDIA's bottom. My strategy timed NVIDIA's bottom. I know that sounds crazy, but I'm going to show you in the way I trade things and why I'm actually rooting for this pullback, because most things are up at the red barrier. I want things down at the green barrier because I want to get into the basement level, right? We're at the basement level on the weekly. We're at the basement level or the green barrier on the daily. And we built a Williams consolidation box on the 2-hour time frame. You can build on the daily. You can see we have one built on the daily here as well, right here. And you could have built a small one right here on the weekly. Are you ready for this? Well, how do you not exit here? How do you know to stay in this thing? Or how do you not exit here? You know to stay in this thing because you bought right here at $99.33. You bought, okay? You broke out of the Williams consolidation box. You went Williams percentage range. You crossed over the 21 EMA. That's the purple line here, the 21 EMA. You had a bullish crossover that, and then what? You stay in it until something changes. If we zoom over here to the daily, what changed? When we got up, let me tie it all together. Broke out of the Williams consolidation box on the 2-hour. We ran up to the red barrier. Once we were up to the red barrier, if you look over here on the daily chart, where were we? We had then broken out of the Williams consolidation box on the daily. This is a bearish Williams consolidation box. We broke out of that on the daily. So then what do? We say, okay, I don't care about the 2-hour anymore. Now I'm strictly following the daily. You see how that goes? So the 2-hour is level 1. It's like a video game. The 2-hour chart is level 1. You want to go from level 1 to level 2, which is the daily, to level 3, which is the weekly. And if it's an investment, you want to be in it for super long, level 4 for the monthly. And guess what? You ride the Williams consolidation box. You ride the Williams percentage range. You ride the momentum from the ground level. From the ground level. Now let me blow your mind. There's a lot of stuff leading up to it, but actually let me blow your mind. We're level 1 here. We ran up to the red barrier. You see we clearly broke out of the daily Williams consolidation box. Okay. So then what happened? Then we're in level 2 right here. Right. So then we can flip this to the daily chart. But you know what? I'm going to leave it as a 2-hour so I can actually just show you. Because I want to show you this. Let me put this all the way out here. 2 hours is a long time. This is going to blow your mind. Okay, remember what I said. In the very beginning, you had a 7% drawdown. You would not have exited, though, because you broke out of the Williams consolidation box on the 2-hour. Level 1 breakout. Check. That level 1 breakout led into a level 2 breakout of the Williams consolidation box and a bullish cross of the 21 EMA on the purple line here. Check. Oh, man. Check on level 2. This level 2 breakout, right, formed a Williams consolidation box. And then what happened? Then we had broken out of the Williams consolidation box on the weekly. The weekly had broken the Williams consolidation box, and then we were up, and away, right? Even though we had come down here and we had come down here, it didn't matter anymore. Why? Because we were on the uptrend on the weekly. So we made it from level 1 to level 2 to now level 3 on the weekly Williams percentage range. And then the rest is history. You are in a Williams consolidation box now on the weekly. It's about to break, though. It's about to break. And you actually are about to exit this trade if we close down. If we do this, that would be your exit signal on this NVIDIA trade or investment. But you want to see the craziest thing? You got in at $99.45. Currently, not even the highest it went. Currently, you have made 74%. We'll round up. 74% right there. Investment. You got in down here. You had a 7, so from where you got in, you had a 7% drawdown. Didn't get out because the strategy didn't tell you to get out. You made higher lows, higher highs, blah, 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 blah. Boom. If you get out here because of the Williams percentage range on the weekly, you'd probably be looking at somewhere in here. And that's still like 60, that's still almost 70% gain. Right now you're at 74% gain. You had a 7% drawdown. You followed the strategy, went from level 1, 2 hour, to level 2 on the daily, to level 3 on the weekly, on the Williams percentage range. And next thing you know, you are now sitting up 74% on NVIDIA. Yes, this was the lows for April, but nobody knew on April 7th that those were the lows. But the strategy told you when to get in. And it did it for Palantir, it did it for Tesla, it did it for so many of these companies and stocks. So that's one of my strategies that I teach. Again, if you're interested, that's one of my strategies that I teach. I look for things on the ground level. I look for things in the basement, right? And then I look to climb out of the basement to the second floor and then go to the third floor. Yes, you most definitely can apply this to the monthly strategy. And like I said, the best thing about that is let's look at UNH. UNH is a falling knife. We don't know when it's going to stop, right? I'm DCAing into it right now because based on my high five snapshot and my fundamental side of things, it's so dirt cheap and undervalued that I don't want some news to come out or some big hedge fund to buy them here or have been buying them this last quarter, and that comes out like Warren Buffett was buying them or something, and then this thing's going to absolutely launch. But I mean, you can follow this strategy. Look what we have. Again, it's crazy. Yeah, we'll look at Tesla in a minute. It's crazy. So, 1, you were at the basement level on the weekly for United Health. 2, you were at the basement level in forming a Williams consolidation box on the weekly and on the daily. So level 3 is on the basement, level 2 is on the basement, and level 1 on the 2 hour is in the basement. It's on the bottom. So it's a falling knife, yes. And as long as we stay within this Williams consolidation box, this Williams consolidation box, and this Williams consolidation box, guess what? UNH will continue to go lower and lower and lower. But what did I just show you on NVIDIA? I showed you that you wouldn't time the bottom perfectly at 83 or whatever it went down to, but you bought it at 99 and then it ran 70%. So you could definitely use this on the investing side of things too. And I've been pondering that as well. But again, I have more cash. So I trade and I invest. So in my investing portfolios, I kind of I use technicals like this, but I use it more so on the monthly and just say, okay, well, here's where I think is the lowest it can go. And I just keep buying. But I'll tell you, this is on my watch list. UNH is on my watch list. As soon as we break out of this Williams consolidation box here, I will be taking a sizable position into a swing trade, or you could say a long-term trade. Why? Because more than likely, this breakout of this 2-hour box will lead to a breakout of the daily, will lead to a breakout of the weekly, and then we go from level 1 to level 2 to level 3, and we are just riding this swing higher. And then you form a bullish Williams consolidation box, and then you do not exit until that breaks down. Now, to get to your question, what about the monthly? You can ride the 2-hour level 1 into the daily, which is level 2, into the weekly, which is level 3, and then you can climb all the way to the monthly. You climb all the way to the monthly, you see as well that we are on the ground level. And so the monthly, also on the ground level, Williams percentage range. And if you're wondering about my the lengths that I use different lengths for all my Williams percentage ranges. I back tested all of them. All the lengths that I use are in with my courses and in with my strategies, and I give you all of that. But so we are at the basement level here on the monthly as well. So you could sit there and say, you know, forget the 2-hour, the daily, the weekly, forget the level strategy, level 1, 2, 3, and then now 4 for the monthly. You could say forget that as an investor. I think it's still really good because you can really buy down there, and then if you're wrong, you can just wait for the next one and then buy more, and then eventually you're going to be right. Eventually, it's going to break out of that and it's going to go higher. I know UNH is going to double my money. When? How long? I don't know. But I know I'm going to at least double my money on this. So we're in the bearish Williams consolidation box now on the monthly. Again, as soon as you break out over that, right? And if you get a cross of the 21 EMA, then you're very bullish. And then you are going to swing up from green to red, right? The pendulum's going to swing. And you want to see something just sick. Level 4, the monthly Williams consolidation box. What do we see? You climb, you form a Williams consolidation box, you stay in that Williams consolidation box. As long as you stay in this Williams consolidation box, the price continues to climb and climb and climb. In just that Williams consolidation box on the monthly here, from here to there, it's almost 100%. Almost 100% in what's that? A little over 2 years. So that's 50% per year. Pretty amazing returns. Pretty amazing returns. So yeah, you could definitely use this with the Williams consolidation box on the monthly as well. And you see it here as well. You know, we broke out of this Williams consolidation box, and then now we just continue to go lower and lower and lower, and until now we swoop and get out of here, right? It'll keep going lower. But again, if we zoom back, guys, what do we see? It doesn't stay down here for very long. It does not stay down here for very long on the monthly, especially. And we also know that on the monthly RSI, it is at the lowest. United Health Group is at the lowest point, the second lowest point it's ever been on the RSI. The RSI means when it's very low, it's very oversold. When it's very high, like up here, right, it's very overbought, oversold. So it's similar to the Williams percentage range. Above here is bullish, down here is bearish. Oversold is down here below 50. Overbought is above 50. So right now we are at the same point in being oversold as we were during the great housing crash in 2008. That's why I'm buying UNH so much, because like we are so oversold back to like 2008. That's crazy. So yeah, you can use all these indicators. Don't go too crazy on indicators because there is a lot and it gets a little crazy. But yeah, you can look at it's amazing. You wanna be sick to your stomach. I'll be sick to my stomach for you. Palantir you could use this as an investment tool as well. So Palantir Williams consolidation box. We never, to this point, we have not broken out of that Williams consolidation box. Look at this. We have not broken out of that Williams consolidation box. And what has Palantir done on the monthly chart? It's continued to go higher and higher and higher. How high? You could have bought in this thing. Look at this. Ready? Williams consolidation box. Williams consolidation box. Breakout, retest, higher. Williams consolidation box, never stopped, never went lower, continued higher and higher and higher. And then you've made almost 1,000%. Almost 1,000% if you bought when this thing broke out like here. Nope, you would have made 1,500%. Crazy. I know. I teach people this. I literally teach people this. I talk about this all the time. Most people don't want to hear it. Most people don't listen because a lot of people are lazy and they don't want to sit here on a Saturday and listen to some guy talk about strategies and Williams percentage range and Williams consolidation boxes and squiggly lines and blah blah blah. But my biggest mistake was that I didn't, and I was back testing this at the time. I didn't entrust in it enough to use it as like on the fundamental side of things. And I sold Palantir around like 70 or 80 because it got so overvalued. But guess what? It only got more overvalued. And what could have stopped me from selling? Now, looking back in hindsight, the Williams consolidation box on the monthly. Now, just to be totally honest, if I have an investment, I don't care how overvalued it gets until that Williams consolidation box breaks on the monthly to the downside. I'm not selling because you would still be in this thing. So I missed out on like another couple 100%. Yeah, it's crazy, guys. It's crazy, but it works. The biggest things you have to realize, okay, is one, on a monthly chart, each candle is 1 month. So this Williams percentage range, okay, get ready for this because this is like the one caveat. The Williams percentage range, it takes the entire month. If we're in August 1st, that's only 1 day of the entire month. That 1 day of the entire month, if we had a big dump, like we had 2.58% down, or maybe, a week or 2 weeks out of that month, if we have a huge down week or 2 weeks, you could break out of the Williams consolidation box. But you need to wait for the monthly to close or at least be in the last week of the month. Because what can happen is just because it's down here after 1 day of the month or 2 weeks of the month or 3 weeks of the month, if it can always claw its way back in. And I could show you this on the replay. Like, this is what I'm talking about. I won't say it never broke down below. I will speed this up. You'll see it. It'll break down below the Williams consolidation box, but by the time the month ends, it gets back into it, or right before the month ends. That's the one caveat to this thing. So here, you ran up to the red barrier. Now you're pulling back. You need to form your Williams consolidation box, right? Yeah, it's hardly a mistake. Yeah, I mean, I made great money in on it, great returns. Can never perfectly time something. But I'm just saying, like, now knowing this strategy and like developing it, like, yeah, that'll never be a mistake I make again. You see it, like, look at this. Like, we just stay in the Williams consolidation box, even though we're down here, we're not doing a lot. We're still like $25 down here, and just watch the Williams consolidation box, guys. I mean, you want to talk about a sick strategy? Just watch this and watch the price movement. I mean, just sit back here and watch like this beautiful. I mean, it's just like, I love this stuff. I love it. I'm such a nerd for it. Look, we just keep going higher. There's no reason to get out. You're still in the Williams consolidation box. No reason to get out. Still in the Williams consolidation box. And then the thing too, this green line and red line right here, that's my high five indicator. So every time you come back to the high five indicator, you could be adding. Those could be your adding points. Every time you come back close to it, you can add more, right? Just keep adding. And as you do that, you just keep going higher, right? Eventually you'll add and like that'll be the time that it breaks and it breaks out of this. But if you're in a good company, like a strong company, like a Palantir or Hood, I'll show you Hood in a minute. Like, yeah, it's crazy. You know, I just want to make a point here, actually. We'll speed it up this time. But I want to make this point. And oh, yeah, by the way, you want to know what else? Look where my buy alert was. This buy alert isn't like some random indicator on TradingView. This is my indicator. You get this indicator in my community, by the way. I coded this indicator, completely back tested the strategy. This buy alert right here, coupled with a breakout of the Williams consolidation box, led to 1,500% in gains on Palantir. You can't sit there and say you could literally go and have been in 10 stocks total and just all 9 of the 10 just failed and the strategy went against you and you lost like 10, 15, 20, 30% on each of them. Guess what? You only need to hit this one Palantir and you would have made stupid money. So I'm saying here, So buy alert, Williams consolidation box breakout on the monthly here, another strategy, another thing that I teach in my community. And then I will show you if we bought on the buy alert, right? Let me play it forward one. All right, there we go. I'm going to buy 1,000 shares on this replay. I'm going to buy 1,000 shares of Palantir right there. Watch what happens. Let's speed it up. Do you have receipts for these trades? Do I have receipts for the trades? So a lot of these were basically whenever we had the 2023 bear market, right? And with the bear market, we obviously were looking to bottom feed. We were looking at companies like Meta and everything like that. I didn't have this strategy then. I have this strategy now. But the biggest thing is I'm not taking a lot of this strategy's buy alerts and everything. Why? Because what we talked about earlier, we are not on the ground level. We are at all-time highs. This strategy is going to print money whenever we get a 5-10% pullback or when we're coming out of a bear market. Yes, you could do DCA. Yes, you could do buy and hold, right? But with this, you know when to get in and you know when to get out. So there you go. So no, I don't have receipts for these trades. I have some receipts for some trades that I've taken, like Zscaler, Snowflake. Some of those names I did get into based on this strategy. But you can see right there, there's your receipt, honestly, because you had your buy alert right there. You had your Williams consolidation box breakout. I'm talking to you about this strategy. You bought $1,000 on that buy alert. You held, you never closed a month outside the Williams consolidation box on the monthly. You've continuously stayed in the Williams consolidation box. You would still be in this trade and you bought 1,000 shares and you would be up $139,560. And you're still in the trade. So real quick, I'll show you for NVIDIA too. Same thing here. The only difference with NVIDIA, though, you would actually be out of this trade. You see we had the buy alert right here. We had the buy alert at, let's call it the high, $23.87. $23.87. The buy alert, you would have rode this Williams consolidation box, and then you would have broke out of it right there. Oh no, you only made 356%. Yeah, no, I get it. I get it, Bijer. Bijer. I get it, man. Look, man, I'm not trying to sell snake oil, anything like that. You guys can join the community, you can not join the community. It's up to you. Like, no strategy is 100%. That's not what I'm saying here. I'm just saying I have these strategies, I back tested them, I use them. I have several strategies in the community. We use a lot of them. Nothing's 100%, right? But these do work. You can see that they work, right? Are they going to work all the time? I will talk about that side of things. They don't work all the time. Sometimes you'll get a buy alert and then you don't get this Williams consolidation box and then a big move. Sometimes you get a buy alert and then it just craps the bed. Case in point, I think it was UiPath. But again, the thing I'll say to that is my whole channel, my whole thing is where trading and investing meet. I do a lot of trading. I teach about a lot of trading, but I also do a lot of investing and teach about investing. And I have my high five snapshot if a lot of you guys have been here before. You don't want to just buy any buy alert. You want to buy a buy alert on a company that you know is undervalued, like a UNH or an NVIDIA back in the day, or even NVIDIA when it was in April lows, or a Palantir when I was buying it 5 or 20 or 25 because it was undervalued, or Robinhood at 19. Like, you don't just use the strategy and say, I'm just going to buy Pepsi. I'm just going to buy lemonade. I'm just going to buy whatever. Okay? Like, that's not how my monthly whole investing, coupled with the monthly indicators and strategy, it's not how you should use it. You should use it with a fundamental mind as well. Palantir, Robinhood, NVIDIA, who else? HIMS was way too volatile for this. I'll just be honest about that. Way too volatile. Yeah, a bunch of other names. Meta, I'll show you Meta. Yeah, it doesn't even show it on here anymore, but there was a buy alert here, and basically it went against us, which technically UiPath is still broken out here, and it could still go higher, but I just don't like UiPath anymore, honestly. But Robinhood, and I know we kind of got off topic here, guys, but I love talking about my strategies, and we're still looking at charts, so it's whatever. If you're still here watching, you enjoy it, so it's all good. Yeah, I mean, look at Robinhood. Just look at it. So there's your red barrier. Let's draw our box. Oh, and you might ask yourself, okay, drawing the box after it's already said and done, that's easy. I understand that. I understand this is all hindsight, right? Look at Robinhood, it ran so much. Look at Palantir, it ran so much. Like, you're just sitting here drawing a box and being like, look at this. We ran all this way. I understand that. How do you draw the box in real time? Well, I'll show you. The strategy with drawing the box in real time is this. You want to run up to, you basically run up past, you see this dashed line right here? That's -20. You run up past -20, as long as you're above -20, the first pullback that you have that goes, anywhere just not below -50, because remember, -50 and below is bearish. Above -50 is bullish, bearish. So essentially, you are looking for your first run up to come up here, break -20, and then you want it to come back down whenever it hits and stops and reverses, that right there is your Williams consolidation box support, first support being created. The more times it comes down and touches that support, the bottom of the box, and bounces, the stronger it gets. It's just like support and resistance, right? So I can play this now for you guys and show you that you ran up, right? You ran up above, whoops, you ran up above -20. So now what? Now I'm looking for my Williams consolidation box support to form. Okay. There it is. Comes down, boom. Right there. You see that? So let's not hindsight this. Let's just do that right there. Boom. You've created your Williams consolidation box. What do we know? Well, we know that we like Robinhood at 13 bucks, or yeah, we like Robinhood. It's basing out here. Let's use some other technicals. It's basing out here, completely basing out here. We're coming out of the bear market. Robinhood is killing it at this point. They're taking on a lot of market share away from other brokerages. And if you were a Robinhood bull in the beginning of 2024 and you said the fundamentals are great, I think it's a great growth company. They just had an EPS positive quarter and they had 471 million in revenue. They beat by 327% on EPS, where trading and investing meet, right? Where they meet. We like Robinhood. We are getting a bullish cross here. And we just formed a Williams consolidation box. You could have sat here and said, oh yeah, we're also breaking out of this like resistance right there. So you could have said, okay, I'm going to buy a little bit more of Robinhood here because of the technicals as well. I'm going to take a little bit more risk with Robinhood here because of the technicals as well. I'm going to buy, let's see, what was that? 13 bucks. So if we bought 100 shares, okay, we'll buy 100 shares here. And if we run it, staying in that Williams consolidation box. Okay, did you see that right there? It kind of broke out beneath it a little bit. But again, it doesn't matter because you have to wait until almost the end of the month or at the end of the month. You can't make a decision with the monthly, you know what I mean? No matter what's going on, because that's how you're going to get stopped out. Yeah, look, we just stay in it. And we do not close our position. We do not close our position until we break out of the Williams consolidation box and close beneath it. So, and like even right there, right? We bought down here at $13.38. We came and wicked all the way down to like 30 bucks. You still almost tripled your money. Even if you got stopped out, you still almost tripled your money. But we didn't get stopped out because we didn't close the month below it. So we're still in this thing, still in this thing, still in this thing, climbing higher. Boom. You just made off 100 shares of Robinhood running my monthly strategy. You made $8,652. And guess what? You were still in the trade because you're still in the Williams consolidation box. Does your service charge for come with proprietary coded by indicators? Does your service you charge for come with proprietary coded by indicators? I have with my high five trading pro tier, which is my highest tier, it's like $99.99 a month. I have a lifetime option and a yearly option. You get all of my indicators, which is like 5 or 6 total indicators. You get all my screeners. You get all my courses talking about my indicators, how to run my strategies. You get all of it. and in the community, with the trading tier and the trading pro tier, you also get bots. Now, with the bots, they alert you and they alert in the Discord. Now, you don't need a I tell everybody this, like, if you don't want if you don't want the bots constantly alerting you, then you can mute them obviously easily in the Discord. But essentially, the bots are great because me or you or anybody in the community doesn't have to go and try to search for these stocks. We don't have to go and try to like find them in a needle in a haystack, right? We simply have the bots give us all these different tickers. And then it's so easy to just sit there and go, okay, punch this in, punch it. Like, I'll show you. I'll open up Discord. Let me just get down to there so nobody's names or anything's in this. There we go. So here we have the 2-hour bot. So what I was showing you guys earlier about the 2-hour strategy, we have the buy long bot, the short long bot, right? And then up in this tier, we have monthly bull bot and monthly bear bot. So let me just show you this, right? A lot of these tickers, like if I don't know the ticker, I don't care. Like in investing in them, then I'm good. I'm not, like I said, I'm not just gonna take random stuff. Let's take AMD. AMD is a hot one, right? Okay, let's look at AMD. That was alerted on 7/24, so I was alerted about a week or so ago. Go in here, AMD. What do we see? Ooh, let me clear some of this because it's a little messy. Clear this. Bear with me. All right, what do we see? Well, if you saw what happened with Robinhood, if you saw what happened with Palantir, if you saw what happened with Nvidia, if you bought on the buy alert, you made a ton of money. Now, let's ask ourselves, do we think AMD is undervalued today? Do we like AMD? Do we think AMD is going to be a big player in AI? Do we think AI or AMD is going to do really good over the next 2, 4, 6, 10 years? I think they are. So if you were running this strategy, you saw what it did with Palantir, you saw what it did with Nvidia, you saw what it is doing right now with Robinhood, and you would only have exited Nvidia. You would still be in Robinhood and Palantir. If that was the case, then you would buy this here today, and you would stay in it until the Williams consolidation box breaks. If we zoom out, we've been here before. You see we had a buy alert, then a sell alert, then a buy alert. The biggest thing with this first buy alert, what was happening? We were already breaking down and then we snapped back. So you would not have bought there. And then the sell alert, you don't really need to be using that to short on a monthly basis because shorting on a monthly basis is dumb because unless it's just a trash company, more times than not, you're just going to go up. We'll talk about Oscar, sorry. So look, we got a buy alert here and then we completely ran from $10 all the way up to $165. Now, the only thing I'll say about this is this one wasn't your perfect Cinderella story. You bought here at $10. We ran up. We never formed the Williams consolidation box. We came right back down and you would have exited at $18.59. Oh no, you made $8. It didn't work, but you made $8. At the end of the day, you could have got right back into it if you wanted to once we ran up here, formed this Williams consolidation box, and then ran from $26 up to $163. So I'll show you. It doesn't work perfectly. It's not always going to be like buy alert, break out of the way. And we didn't break out of Williams consolidation box either here. We did here. And then we went on a really nice run from 80 to 230. So you can just see, I mean, we took this multiple times and it worked very well. If we run the strategy test, oh, I only have the indicator on here. It's all good. You can see like it has a lot of buy and sell alerts, but more often you're doing what? You're doing it based off of this, right? You can see bullish cross, broke out of the Williams consolidation box. We ran higher. You bought in at 4. You could have sold at 10. So, okay. What's up, Wyatt? Buying Tesla. Somebody kept on saying Tesla. Let's do Tesla. No, I'll just be honest. A monthly chart for Tesla, you guys should already know it's gonna be super volatile. You know, not every stock is just like Tesla's just a different beast. You guys know that. Do we get this type of analysis in the subscription? Yeah. So I mean, I have a lot of community members here too. I do these. I started these weekly technical analysis and weekly fundamental analysis, alternating week by week. I did them, and I wanted to start doing them for everybody instead of just in the community. Our community's big, but a lot of people are very busy on the weekends, and it wasn't like everybody and their mom was showing up to when I did these. So instead of just speaking to deaf ears and only like a couple people, you know what I mean? I decided, why don't I just do this for free for everybody? And then once we get big enough in the community and then people are like, hey, you know, we're in the community, we want you to do specific live streams for us, then I'll pull back a little bit. There will always be these free live streams, but we can maybe see something in the future where it's like, okay, I'm going to do 2 exclusive live streams in the community and then 2 free live streams for everybody. You know what I mean? So it's just right now, like I'm still a growing small account, so I rather just do it for free, and you know, you still get a lot of great content and a lot of my indicators and everything, and all my trade alerts, all my investments, everything in the community. So you're still getting great value, in my opinion. But yeah, that's the whole reason behind that. But yeah, I teach you how to fish, and I also show you how to fish, like by doing these strategies. So. Tesla, you had not really Williams consolidation box. You just kind of had a breakout here. You had a low, a higher low, and then you broke out there. You broke above the 21 EMA. And then you had a buy alert right here. The buy alert was right here, basically. You can see that, right? The buy alert was at open, close, $22. We closed this candle. $22. So we closed this candle at 22 bucks, 2019. I was buying as an investor right here between like 2017 and 2019. Didn't have this strategy then, by the way. Yeah, you got your buy alert. You ran up. You hit your red barrier. Guess what? You came crashing right back down. You broke below the negative 21 EMA, and you broke and closed below the 50% line. So you would have exited. You would have gotten at 22. You would have exited at a close of 35. So again, you made 13 bucks on your investment, and then you would have exited. But then you would have saw we snap back up, and then you would have sat there and said, okay, wait a minute. We just formed a Williams consolidation box. Let me get back into this thing. And you could have wrote it up here. And then again, you might have got stopped out there. You would have closed out there because of this pullback. So you see with a name like Tesla, it can be a little bit more difficult. It can be a little bit more difficult because Tesla is one of those companies that is just like crazy stupid volatile. Crazy stupid volatile. If you did this on like an Apple, I mean, Apple would have been pretty solid. Got in there, ran up. See, the thing is, you ran up and then you pulled back, and that would have been your Williams consolidation box right there. Again, it's the first place you pull back above -50. So if it's really deep, that sucks. You don't want like something at like really close to -50. But if it does it, it does it. That is what it is. But you see, we got the buy alert, and then we ran up and up and up, and then eventually we broke out right there, and you would have exited right there. So this would have been 48 up to just call the low of 134. So a 4x basically. 40, 12, 16, almost 4x. Yeah. Do you do crypto at all? I do crypto. And actually my recent post was thinking of starting Fubo position with earnings. I'll get to all your guys' comments. I got time. I got more time today. My kid is gonna wake up here soon at 2:30. It's 2:24, so we will be wrapping this up a little bit. I told him we'd go to the park. We're gonna go to the park today. He's almost 3, so can't be breaking promises, guys. Can't be breaking promises with my little guy. So ETH post, yeah. So I do crypto. I'll get to your. Do you think you'll get into CMPS? Sorry, I'm kind of bouncing around here with the comments, but I'll get to all of them. CMPS. My goodness. 406 million market cap. I typically do not like investing in a company sub $2 billion market cap. I just think it could be very swayed. There can be a lot of manipulation. Big buyer can come in there and move the stock pretty crazy. So, yeah, I mean, not my cup of tea usually. And with something like this, it's very difficult. It's very choppy. Yeah. I did look. I think I looked at. I have it on the high five snapshot to run fundamentals on it. But I'll just be honest, man. I don't mess with companies under 2 billion. Just not my cup of tea. Crypto. We've talked about that. I exited all my Ethereum. If we look at the weekly chart, let me first do Oscar. I don't really have much to say about Oscar, guys. Look, we are almost again at the ground level. We're almost at the ground level. We've been at the ground level multiple times. And you consistently, after you're at the ground level, you consistently get these swings up. So it's just a matter of time. This is more of a fundamental long-term investment, guys. So I'm not really worried about this chart. One, because we have such strong support in here between 11 and $14, such strong support. And we're just in this consolidation period. And overall, you see that we're still in this amazing cup and handle pattern. Once we break out over $23, and so basically once we break out at $24, you're going to see a move to 29, 37, 45. I'm not worried about Oscar. I love it as a long-term investment, 1, 3, 5, 10 years. I continue to buy this thing. I think they're a massive disruptor. Check out all my other videos. I have a bunch of videos out here on YouTube. You can check those out about Oscar. I have a bunch of posts on X about Oscar. Yeah. I already talked so much about Oscar. Chart looks fine. It looks like dog crap, but we're just in this consolidation period since 2024, basically. Just up and down and up and down and up and down to 20 to 23, down to 12 to 23, down to 11 to 23, down to 13. Okay, whatever. Eventually, it's going to break out. We've seen it with all of them. I could be wrong on the investment. I don't think I am, but we'll see. Oscar on the monthly, again, this one's just way too volatile. So it's just one of those cray ones. Cray. But you can see Williams consolidation box. You broke out. You rode it higher. You could have kept riding it. It's very I don't know. It's very choppy though. You didn't run up above -20 and then pull back and create that Williams consolidation box. So you probably would have exited once we reversed here. Still at a gain because you would have got in here. So enter there, exit there, and then re-enter there maybe, and then exit there. So still a, what's that? 8 to 16, basically, still a double up there. We got a buy alert, then we got a sell alert. This thing's just all over the place. I don't know, guys. I'm just in it for a long-term fundamental investment. I think it'll do really, really good over the long term. You see we have this massive volume shelf, point of control. I'm not worried here. We're just at very strong support, just consolidating a lot here. Eventually, we're going to do this, and then we're going to form this Williams consolidation box, and then I will not sell out of this thing until we break down. And it'll be that easy. Circling back, HIM's earnings report, we'll get there. MSTR, ETH. I want to scroll back to earlier comments. The moving averages on your monthly UNH chart, is that EMA or SMA? It's SMA on my monthly UNH chart. Well, so this red and green and yellow, that's my smoothing line to my high five indicator. But these ones right here, that is your 200 month moving average, your 100 month moving average, 50 month moving average, and yeah, that's what I got there. That was for Charles. Tuned in late is a Williams consolidation box just under 20 or over 80 on RSI. No, Bjier, the Williams consolidation box is once you, and I think I covered this after you got in, you run up above negative 20, the first pullback you get, and then like you hit support and you bounce. That is the start of your Williams consolidation box, and then you want to see it come back and retest, obviously, but just stay in there. As long as it stays in there, you'll continue higher. And it's just vice versa for here. You come down, you break up, boom, support or resistance on the downside, and then you just stay in this thing. That's your Williams consolidation box. Can we look at hood? We already did that. We're good. Oh, you wanted to look at, yeah. So hood on the level strategy, it's not going to be good because well, actually, you could have shorted hood. So broke out of the Williams consolidation box there. So you broke out there. You broke out then. Let's see. Actually, it would have been back here. Right there. You broke out. And then that would have been right here. You broke down. So level 1, you could have started a short up here. Level 1 took you there. Level 2 had you stay in here. And now level 3 is dragging you lower. And I do think this continues down to the red barrier. So I do think hood, and I was telling everybody in my community, I was like, look, hood, it's a great company, awesome, but look, if you're in it as a trade, I mean, I would be out of this thing, or at least trimming and taking gains off the table. If you're in it as an investment, I think we already went over it a million times. Look, you're still in this Williams consolidation box. So as long as you stay in here, you'll keep going higher. So don't even worry. Basically, don't worry until your Williams or your Williams percentage range breaks below negative 47. ETH down more. Let me show you what I posted. This is Alpha TA Weekly, guys. Alpha TA Weekly. I'm trying to give you as much alpha as possible. And if you want more, again, you can join the community. If you want my trades, you can join the community. Full access. Ask me tons of questions. Honestly, not enough people talk in the community. Not enough people utilize me enough. Not enough people ask me questions and try to get, the information I have. Do it more. I'm only one person. I have a family, but you're in my community. I'm here to serve you. I'm here to help you in your trading journey, in your investing journey. We do it all. Okay, so ETH, Ethereum. I was in this name from, so here, I'll show you why I got in. I got in Ethereum. for one simple reason. Now, with I can go into the level strategy and show you how we could have caught the bottom off the 2-hour and then the daily and then the weekly. I could show you that. We didn't do that because I'll just be honest, that level strategy that I showed you earlier in the stream, that is something very new. Before I was doing day trading, swing trading, and long-term trading in their own perspective buckets. Now we're getting to conjoining the swing trading and long-term trading to where we get in early and stay in longer instead of getting in and out with the swings or with the long-term trade being at the tail end of a trade or only getting in based off a weekly. So now I do 3 trading styles. One, I day trade with a 2-minute, 5-minute, 15-minute chart using my strategies in the Williams percentage range. I do the level strategy, level 1, 2, 3, 2-hour, daily, weekly, and then level 4 is monthly if you want to stay in it longer. And then the third way I trade is I still actually do use the weekly chart to trade off of. And basically, I'm looking for one specific setup. I'm looking for this. That is a trend line. It's a poorly drawn trend line. I'll do a better one. That's a trend line. I'm looking for a breakout over the trend line and a breakout of the Williams consolidation box. 1, 2. 1, 2. You get in this thing, right? There's your Williams consolidation box as well. So even if you got in here at the top at 25.31, and then you had to ride this thing down to 21.04, so you got in and it went down like $300-400, you wouldn't have exited because you're still in the you were forming your Williams consolidation box, right? And then you went. But when I actually got in on this one was right here. I got in right here because what I see, basically, you have this from the bottom, from the bottom to the top. You're just riding this, just riding this, right? And then here, wick, 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 big breakout. So basically, I got in like right around $2,600 because we had this massive breakout here. The measured move of this, so the measured move is simply just taking your bottom to top. Is that right? Yep. You take the bottom to the top, you put it right here where you broke out at. And this is actually a little bit higher. There you go. We rode this up to here. I exited then because now the Williams consolidation box hasn't even broken out yet or broken down yet, right? So on the weekly here, you could sit here and say, well, you could still stay in it. I exited for this specific reason. Ethereum is absolute dog crap. I watch every YouTube video, bro. You're goated. Thank you. I appreciate that, Wyatt. Yeah. I appreciate you, man. I love your comments. The reason I exited was because Ethereum and the more you trade a stock, the more you trade a crypto, the more you understand from the history. Because looking at this chart right now, what do we have? We have 4 years, 4 long years of history on Ethereum. And what does this chart tell us? Just look at the chart and look at all my circles. Catch you next show. Thank you all for thank you for all of this. I think you said there's a little guy waiting on you. Yep, for sure. Yeah, I don't hear him. He's still gotta wake up and then watch his Paw Patrol for a minute. So we got a minute. This is the last thing we'll do, and then I'll get out of here. I appreciate that though. Stay on me, because I'll lose track. Last thing with Ethereum. Look at all the circles. What can you tell with all of these circles? You can tell that we run up to 4,000, 4,100. Sell on the circles. I don't know. Yeah, basically sell on the circles. What about the history of ETH in 2020? 2020. Oh, that was down here. But getting back to this point, You ran into the red barrier. You ran into 4,000. Just full reverse. Ran over in 2022, 2021, ran over to 4,700. You ran into the red barrier, plummeted. Ran to the red barrier, plummeted. Ran to the red barrier, plummeted. Ran to the red barrier, plummeted, plummeted, plummeted. Running into the red barrier. Are we going to plummet again? Well, history tells us we are. History tells us that $4,000 level is a steel-eyed beam and Ethereum cannot break through. Eventually, they will break through. Eventually, they will go to 5,000, 6,000, 7,000. I do believe that. But I was up like almost 50% on my Ethereum. And I sat there and I said, okay, we're running into the red barrier. It's done this 1, 2, 3, 4, 5, 6 times. This is the 7th time. So I sold out of Ethereum. When will I buy back into Ethereum? Well, it depends. Either we'll come down here and hit our Williams consolidation box. If we bounce here, that tells me that we are going to stay in the Williams consolidation box, and I'll get back in then. If we don't, and we break down here, break through that 21 EMA and break out of the Williams consolidation box, that means we are going back down to bare minimum 2,500 to 3,000 area. And then guess what? I'll look for us to build a Williams consolidation box and then look for a breakout, look for a buy alert, something like that. So that's my plan with Ethereum. That's my plan for everything. Thanks for your insight. Do you think that based on the Williams percentage range, PayPal is getting ripe? I already know that it's on the basement floor. Yep. So you see with PayPal, I mean, I don't even know what happened. Can you please explain how to use High Five Williams consolidation box and TradingView? Do I need to join the community to somehow integrate it into your account? Yes. Yeah. They're my private indicators. Are not on TradingView. They're my private indicators. You'd have to join my community and then you get access to all of them. Like I said, I spent a lot of hours, many sleepless nights back testing them and preparing them and coding them and all of it. So, yeah. But PayPal, it was doing good. Broke out of this Williams consolidation box. You could have made good money on it. You could have got in, around $65, wrote it up in the Williams consolidation box, and then, you could have. That's the tough thing here with this one. You basically, you broke even. You broke even with this one, and that's going to happen. It's going to happen. But as we've already seen, more times than not, you're going to make a lot of money. And it comes down to, on that fundamental side, picking the right companies. I think PayPal is fundamentally undervalued, but man, I hate PayPal anymore. Honestly, it does crap like this, a 14% drop after earnings. It's just not doing it. It's been like, it's just been like dead money for the last like 3 years, unless you're buying the bottoms. It's been dead money, So I don't know. PayPal. We're back on the floor down here, right? We'll just have to see. We'll just have to see what happens. Maybe on the monthly. No, see, that's the thing on the monthly. You're bearish. You're bearish on the monthly. Down, lower high, and you can come back down here. So yeah, I don't know. PayPal is just, man, what a fall from grace, and just can't get it going again. It's the same megaphone type pattern. Are you talking about PayPal? Gator. Got it. 10x. It's my first time here. Yeah, of course, man. Welcome in. Yo, what's up, bro? What stocks are you looking at to buy during this dip? I posted them all in the community, but I mean, I've been pretty vocal about what I've been buying on X as well. I look I look for the sectors that are most beaten up. I look for the sectors that are just getting pummeled. And I'll buy those and then sell those once they correct back to their fair value or higher. So companies like UNH, Novo Nordisk, Oscar, stuff like that. But before I go, I'm going to go. Look at Zscaler on the monthly. So again, this one's choppy, but you had a cup and handle. You broke out of that cup and handle. You're coming back to retest that cup and handle. While you're coming back to retest that cup and handle, you're doing what? You're building a Williams consolidation box. On this one specifically, I like Zscaler, cybersecurity company for the long term. You see what happened there? See what happened there? Broke out again. See what happened there? Went down, chopped around, and now we're back up here. Once we get this, boom, once I get that support on Zscaler, I'm in this like I'm in there like swimwear. Once we form that Williams consolidation block, we might not. We could just keep going down. I'd rather wait at this point because it is a little overvalued, but I still like it. I'll wait for that Williams consolidation box to be formed. Once that happens, I'll get in there. And then I will not exit this thing until we break down out of this because I think we can run at least a 439. Probably a lot higher. But yeah. Cool, guys. Appreciate you all. If you haven't done so already, smack that like button. Hit the subscribe if you're not already subscribed. Leave me a follow on X, wherever you're watching this, X, YouTube, whatever. Do me a favor. Like this. You know, it's a lot of work. We just went an hour and 42 minutes. My voice is getting raspy. I appreciate all of you guys. Hims, sorry, yep. I'm a people pleaser, man. Hims. It's too volatile. Look at that Hims on a monthly. That is absolutely crazy. Absolutely crazy. I like Hims for a long-term fundamentally undervalued company. They're not as fundamentally undervalued right now. They still are for the long term, but I didn't share my screen. Yeah, you see it. It's just it's too choppy. But that's what happens when you have 30% moves in a day, guys. Good luck. Good luck. But again, not every company's like that. Tesla-esque, company that's crazy like that. But cool. Yeah, do me a favor, guys. Like this, share it. If you have anybody that wants to learn technical analysis, or learn some strategies, or see some fundamentals, technical stuff on a YouTube channel by a guy like me. I appreciate you all. Have a great Saturday and Sunday. Have a great weekend. I'm gonna go hang out with my kid. We're gonna go to the park. Have a good time. I appreciate you guys. Love you all, and I will catch you not next week. I won't be here next week. Going on vacation Friday. This Friday coming up, going on vacation, so there will be no live stream next weekend, and we'll pick it up the weekend after. All right, guys, take it easy. Have a great weekend. See ya.